Bloomberry Resorts Corporation Solaire's new project to start in 2024. Ricky Razon has yet to get 40% of Cavite land committed by Panlilios. Bloomberry Resorts, Bloom, the gaming and leisure arm of ultra-billionario Ricky Razon, is planning to launch its new resort community in Panaman, Cavite next year. In a report to the Philippine Stock Exchange, Bloom will begin construction of its golf and casino hub in Panaman Bay in Ternate, Cavite after completing its second casino hotel. Solaire North in Quezon City, which is expected to be finished by the first quarter of 2024. Bloom, through Solaire Properties, is currently rushing the delivery of land titles from the Panlilio family, Boulevard Holdings, Puerto Azul Land, Ternate Development and Monte Sol Development, to secure the land needed for the project. As of the end of 2022, Bloom has received a total of 16 lots covering 1.6 million square meters, which is only 58% of the 2.8 million SQM land, worth P2,700 per square meter or P7.6 billion, that the Panlilios committed to deliver when they signed an agreement with Bloom in May 2022. Solaire Properties plans to develop an integrated resort and entertainment complex with a world-class casino, hotel, golf course, commercial, residential and mixed-use development. Globe Telecom, Inc. equals remit in a rush. Gcash now available in U.S. Pinoys living in the United States can now start using their American cell phone numbers to sign up and bank with Gcash. The Ayala-owned mobile wallet has rolled out its beta app for Gcash overseas to the USA this March, following initial trial runs in Japan, Australia, and Italy. So far, only the first 1,000 US-based users to download the Gcash app can try out the special e-wallet version for overseas clients. To register, one has to key in their US-issued mobile number, scan their Philippine passport or any other Philippine government-issued ID, and take a selfie to verify their identity to avail of the app's services. Fully verified users in the US can cash in via Remitly to Gcash to send money, pay bills, or buy load. Gcash can also be used for e-wallet transactions in other countries, such as Japan, South Korea, Singapore, Malaysia, United Kingdom, France, Germany, and Italy. SCC Semirara Mining and Power Corporation all in the family. Christina Goshanen, sister Edwina, son Christopher rack up P25 million shares in slumping Semirara. The Consunjus are showing their faith in the family's coal mining and power firm. Semirara Mining and Power, SCC, President and COO Christina Consunji Goshanen, Director Edwina Consunji Laperal, and VP Christopher Thomas Goshanen picked up a total of P25 million shares after the stock dropped to a 52-week low. Christina bought a total of 567,600 shares at a price range of P29 to P29.90 on March 10, 14 and 15. Her sister Edwina acquired 248,200 shares on March at a price range of P29.05 to P29.35 while her son Christopher purchased 17,000 shares at a price range of P29.45 to P29.65 on March 14. SCC has cooled down from its 52-week high of P44.40 due to falling coal prices. Its profits plunged 31% year-on-year to P2.28 billion in the fourth quarter of 2022. EU East-West Banking Corporation East-West net income up 42% in 2022. Goshanen-led East-West Banking Corporation, East-West Bank, is optimistic it will surpass its 42% growth in 2022 and exceed pre-pandemic asset levels this year, as the lender reported more loan bookings. In an emailed statement, East-West said its net income rose to P4.6 billion in the past year, excluding one-off items in 2021. Core revenues grew 12% to P28.1 billion. We accelerated our loan bookings in the second half across all lending products, which improved our earning capacity back to pre-pandemic levels, President Jacqueline Fernandez said. We intend to exceed this in 2023, as we carry on the momentum from last year, she added. The company said its loans grew by 20%, driven by its credit cards, business loans, and key salary loan segments. Deposits improved 79% to P329.2 billion. The full-year impact of our 2022 asset buildup will be felt this year on our core income performance. The growth momentum should improve this year as we exceed pre-pandemic asset levels this year, newly appointed CEO Jerry Go said. The bank's total assets stood at P421.4 billion at the end of 2022, with the balance sheet shifting largely towards higher-yielding consumer lending assets. East West is a subsidiary of Philinvest Development Corporation, which also has businesses in real estate, hospitality and tourism, infrastructure power generation, and sugar. Its subsidiaries include East West Rural Bank Inc., East West Insurance Brokerage Inc., East West Leasing and Finance Corporation, Quest Marketing and Integrated Services Inc., and Assurance Solutions Insurance Agency Inc.
Shares in the company closed last Friday, March 17, at P7.06 apiece, up by P0.18 or 2.62% from Thursday's finish of P6.88 per share.
Smc Cnvrg Corporation (ERC) to review SMC termination of power supply deals. The Energy Regulatory Commission, ERC, said it is set to review the decision of SMC Global Power Holdings Corp. to terminate its two power supply deals with Manila Electric Company, Meralco. ERC Chairperson and Chief Executive Officer Mona Lisa C. Dimolanta said in a Viber message on Saturday that the agency had been informed by Meralco through SMS of its receipt of the notices of termination of the power supply agreements. On Friday, Meralco announced that two subsidiaries of SMC Global Power, Excellent Energy Resources, Inc., EERI, and Masinloc Power Partners Company Limited, MPPCL, had terminated their power supply agreement, PSA, with Meralco. Ms. Dimolanta said the deal with EERI and MPPCL covered 1,200 megawatts, MW, and 600 megawatts, respectively. She said Meralco is set to jointly file with the companies the appropriate pleadings with ERC by Monday for the withdrawal of the PSAs. ERC will then review and act on such motions, when filed, after determination of compliance with law and legal processes, she said. In a Viber message on Friday, Meralco confirmed receipt of the notices and, "We are currently studying our available options." In its statement, the power distributor said the available options include the possibility of requesting the approval of the Department of Energy, DOE, to conduct another round of competitive selection process for the 1,800 megawatt requirement of Meralco. The two companies under San Miguel Corp's SMC power arm are supposed to start delivering Meralco's needed capacity by 2024 and 2025. EERI proposed to supply capacity from its natural gas power plant starting in 2024 for P4.1462 per kilowatt-hour, kWh, while MPPCL offered 600 megawatts from its coal-fired power plant for P4.2605 per kilowatt-hour by 2025. Meanwhile, advocacy group Power for People Coalition welcomed the recent development.
With EERI and MPPCL backing out, consumers are spared from the surely costly bills they would have been charged out of the two contracts, the group said in a statement.
As Meralco seeks to hold a rebid, it now has a chance to ensure genuinely least-cost electricity for consumers. We advise Meralco to ensure that it uses straight energy pricing in its terms of references for the new contracts, and for DOE to mandate fixed pricing in all PSAs, or else face the outrage of consumers, it added.
Terry L. Ridden, convener of think tank InfraWatch PH, said in a message on Saturday that while the decision of SMC Global Power to terminate the PSAs would not immediately result in higher prices, the public should expect rate changes upon rebidding.
The public should expect rate changes upon the rebidding of the power supply gap left by the termination of the SMC power supply contract. We have yet to see whether the corresponding new contracts will result in higher prices, but the ERC should ensure the least cost based on market conditions at the time of rebidding, Ms. Ridden said. Cnvrg Converge Information and Communications Technology Solutions, Inc. Converge considers capacity swapping for subsea cable. Converge ICT Solutions, Inc. is eyeing to grow its subsea cable connections through partnerships and swapping, with its intent of creating new network redundancies. Subsea cables are the gateways of the Philippines, so it's not enough to build just one. You need to put in several redundancies, Converge co-founder and chief executive officer Dennis Anthony H. Wee told reporters on the sidelines of a recent media briefing.
Mr. Uy said that Converge will try to maximize its current capacity through swapping.
With our current capacity, if someone will build a new cable, we can swap our excess capacity in the other Subsea cable so there would be redundancy, he said in a mix of English and Filipino. According to Mr. Wee, Converge is in discussion with several companies, both from the West and Asia, that are planning to build Subsea cables and for swappings. We are already in talks for swappings because we have a lot of capacity, he added. Actually, our traffic comes from America. We are not similar to China and Indonesia. So, the tendency is we will need more capacity, multiple redundancies because no one can tell what will happen to that cable, he added. So, the more multipath we have, the better for our network, and this is what we are trying to do, he said. For 2023, the listed fiber internet provider allotted up to $15 billion in capital expenditure, a fourth of which will be used for investments in Subsea cable and data centers. FNI Global Ferronickel Holdings, Inc. FNI secures deal with Baosteel for 1.5 million WMT of nickel ore. Global Ferronickel Holdings Inc. FNI, the Philippines' second-largest nickel ore exporter, has signed a contract to supply 1.5 million wet metric tons, WMT, of nickel ore to China. Baowu Steel Group's subsidiary, Baosteel Resources International Company Limited for the 2023 mining season. The nickel ore will be sourced from FNI's operating mines in Surigao del Norte and Palawan, managed by Platinum Group Metals Corporation and Ipilin Nickel Corporation, respectively. If the stockpile inventory allows, 1/3 of the shipment will be low-grade nickel ore, while the remainder will be medium to high-grade nickel ore. The selling price of each shipment will be set on a monthly basis, based on the prevailing market price at the time of price setting. JFC Jollibee Foods Corporation Jollibee dips after market sell-off caused by U.S. banking jitters. Shares in Jollibee Food Corp. dropped last week despite reporting strong earnings, with analysts blaming investor anxiety that led to a sell-off in equity markets after the collapse of US-based Silicon Valley Bank, SVB. Data from the Philippine Stock Exchange showed the fast food giant ranking 11th in value turnover with $816 million worth of 3.69 million shares changing hands from March 13 to 17. Shares in Tony Tan Kacshing's food service company closed at $223 apiece on Friday. On a weekly comparison, the stock inched down by 1.4% from its $226.20 close on March 10. For the year, it fell by 3%. There was heightened anxiety in the market this week as investors were concerned that the closure of some U.S. banks last Friday may lead to another global financial crisis, Jonathan J. Latuha, senior equity research analyst at Philippine National Bank, said in an email. Mr. Latuha said these concerns resulted in a sell-off in equity markets. Aniceto K. Pangan, an equity trader at Diversified Securities, Inc., said Jollibee's stock price movement was primarily due to the volatility in the market, attributed to the financial crisis in the U.S., as SVB resulted into a bank run. SVB, a bank based in Santa Clara, California, collapsed on March 10. The lender specialized in providing services to venture capital-backed technology and life science companies. SVB reportedly took advantage of the deposits it had from startup companies and used the money to buy long-term U.S. Treasury bonds. When the U.S. Federal Reserve started hiking interest rates to combat rapid inflation, depositors demanded higher returns. Reports said the bank was forced to sell the bonds at a loss. When it revealed the losses, tech investors panicked and pulled out their money, resulting in a bank run. SVB became the largest bank failure since the 2008 global financial crisis. Another U.S. bank, New York-based Signature Bank, is said to have also suffered failure when state regulators abruptly closed it due to a similar systemic risk, news reports said. Back home, the central bank governor said that banks in the country have no exposure to the collapse of SVB. Luis Alimilingen, head of sales at Regina Capital Development Corp., said that aside from the local and global sell-off, investors also reacted to Jollibee's 2022 full-year earnings result. Jollibee reported a 26.4% growth in its attributable net income to P7.56 billion last year compared with P5.98 billion in 2021. Gross revenues increased by 38%, reaching P211.9 billion from the P153.58 billion generated the previous year. The listed company said it delivered another year of strong growth in challenging macroeconomic conditions. In a press release, Jollibee Chief Executive Officer Ernesto Tanmantiong said system-wide sales and revenues for the year grew by 40.2% and 38%, respectively, both at the high end of our 35% to 40% guidance range for the year. System-wide sales measure all sales to consumers from company-owned and franchised stores.
Mr. Tanmantiong said sales growth was driven by a 27% same-store sales growth, 6.1% from new stores, the impact of the Milksha acquisition, and 5.2% contributed by foreign currency translation gain.
He added that dine-in sales improved significantly in off-premise channels, particularly delivery, showed continued resilience.
On the other hand, the last 3 months of 2022 saw a decline in Jollibee's attributable net income by 90.3% to Pw 320 million from P3.28 billion in the same period in 2021. Fourth quarter revenues rose by 36.8% to reach P61.55 billion.
The company said it maintained global expansion momentum by opening 542 stores ahead of a plan this year to open up to 600 stores, both franchised and owned, and hiking capital expenditures to P19 billion. Mr. Pangan expects sustained expansion growth, helped by China's reopening. He said uncertainty on the global front may pose headwinds with the continued lending rate increase by central bankers globally to rein in inflation. Hopefully, we may see easing within the year that may improve further the economic activity and further lift up the growth, he said. For Mr. Limlingen, the increase in the company's revenues was a positive development. Overall, Jollibee is categorized with all consumer names, so naturally when overall inflation falls, the assumption is that margins will improve for the company, and this would entice investors to buy into the stock, along with other names, Mr. Limlingen said. He pegged the stock's immediate support at P215 and P212 levels and its resistance at P226 and P232 levels. Meanwhile, Mr. Pangan placed immediate support at P218 and immediate resistance at P228.00.
AP. Aboitiz Power Corporation. Aboitiz Power Unit to supply retail electricity to Pampanga's Best.
One of the country's top processed meat producers, Pampanga's Best, Inc., has secured a retail electricity supply deal with Aboitiz Power's subsidiary Adventenergy Inc. The deal entails the provision of retail energy amounting to 1,700 kilowatts, kW, to Pampanga's Best's 4-hectare production facility in San Fernando, Pampanga. Aboitiz Power retail head James Byron Yu said the collaboration aligns with their goal of having a positive impact on more customers. Pampanga's Best, for its part, said the partnership would enable them to continue manufacturing excellent food products through the utilization of advanced technology and sustainable practices. SMPH SM Prime Holdings, Inc. SM Prime expands network with 4 new malls set to open in 2023. SM Prime Holdings Inc., the integrated property developer owned by the Tsai family, is set to continue its expansion in the Philippines and China with the opening of 4 new malls in 2023. With a proven track record of delivering world-class retail spaces, SM Prime Holdings is well positioned to meet the growing demand for high-quality shopping experiences in these regions. The new malls set to open this year include SM City Bataan, SM Center San Pedro, and SM City Santo Tomas in the Philippines. In addition to these, the company is also set to launch a new mall in Yangzhou, China. Collectively, these developments will provide 0.2 million square meters of gross floor area, adding to the company's existing portfolio of retail spaces that meet the evolving needs of its customers. With these new developments, SM Prime will further bolster its already impressive network, which currently consists of 86 malls in the Philippines and China. In 2022, SM Prime Holdings opened 4 new malls, including SM City Roxas, its first mall in Capiz Province, SM City Tanza in Cavite, SM City Sorsogon, and SM City Tuguegarao in Cagayan Province. These new developments have allowed the company to expand its reach and continue to provide exceptional retail experiences to customers across the region. SM Prime's residential arm SMDC is also planning to expand its operations in the provinces to help bridge the housing gap. With 18 residential developments already in key provincial cities, the company is well positioned to meet the growing demand for high-quality housing in these regions.